going into this FOMC meeting, that may be the message, right? That they're not able to cut at this point, and that maybe for several meetings still until they have a good assessment of inflation. And you're right, that is mostly the effect that this has on the yen, because since the yield curve control was implemented in 2016, the yen was really influenced by the interest rate differential between the US and Japan, particularly in 10-year interest rate differential. And that's, I think, still going on. Every time the yen gets weaker, the 10-year yield also goes higher in the US. Now, to your other question, the Bank of Japan obviously at some point will again hike rates. There's some consensus on it and expectations. And even I think within the Bank of Japan itself, what it sounded like from UADA was that they wanted to be very cautious on hiking rates and not having to really do what the Fed did in 2022. Nonetheless, they do deal with inflation that is moving in their direction, and deflation is being officially declared as over, as ended. So the rate hikes ultimately have, I think, in Japan would have to partly do the job for this yen to stabilize, to say that. But what we're ultimately really looking at is the rate of change of the yen. So month to date, the yen is about 7 yen higher now. So what they say in FX, 7 big figures. In 2022, it was sort of like 10 yen per month that was happening, and then they intervened. So I think there is something about the rate of change that probably is watched closely before the Bank of Japan and the Ministry of Finance do something. But you're right about the rate hikes. That will be a process of later, and will be more driven by the Fed's rate cuts, which don't seem to happen right now. So the yen could go more weaker from here pretty quickly over 160.
I was just going to ask you for a number there, pretty quickly over 160. But again, it's about the rate of change, rate and pace of change, the delta. I mean, hasn't this been, over the last, say, 2 weeks or so, already a pretty ripping sort of move?
For sure. As I mentioned, it's almost 7 yen for the month. And I think the last week and a half, it's been almost 4 yen of that has been just the last week and a half. So there's definitely an acceleration going here. And what having traded FX a lot myself in previous jobs, still kind of check with some people in the market, and I've been told like there's just barely any trading happening in yen. And this is the most liquid currency pair, Martin. It's actually the benchmark per currency pair out there. It's more liquid than anything else. So that there's little volume means that the FX traders are very wary of, like, it could be any moment they may come in. I don't want to be positioned, and therefore gaps each time higher against the dollar, as there's no liquidity offered there. So it is somewhat worrisome. So I do think, to your point, the rate of change, if it picks up more speed in the next couple of days, you would get pretty closely to a point where there's going to be a reaction coming from the Ministry of Finance and the Bank of Japan to try to stop that.